Hey everybody, this is David Skrika. So today we're going to look at junior miners. So the question is, will junior miners ever rally? I was just talking about this with Colin Cattell, and obviously he's probably frustrated because even though he has two larger deals by junior mining standards, Nevada King and Newfound Gold, um, he would like to see. I did a pre-IPO and a deal called Golden Planet with Colin 3 years ago, and I was just asking him. He's been waiting for the market to turn around because we did it 3 years ago, which would have been right here in 2021 when we all were hoping that junior miners were going to break this kind of long-term downtrend. Actually, maybe we'll just draw that trend line right now. From the 2007 bottom, you can see right here, and it basically failed. And then so and then the market, of course, turned down in 2022. Usually, when you do a pre-IPO, it takes 6 to 12 months to come out. So he was looking, so when this happened in 2022, he was like, the hell with that, and then they continued to move lower. And it looks like, we're basing, and this is the little rally that's happened this year. We can see is nothing. So these are down like 80%. If you adjust for inflation, they're probably down 90% in the last, nearly 20 years or 18 years since 2007 or 2006, since the top. And you can see that when they hit here in 2020. So I do believe we are going to enter a bull market, and it's going to be more than just these little rallies. Like in 2016, we saw this little 1 2 year rally in 2016, 2017, and then we saw another 1 2 year rally in 2020, 2021, and another, basically 3 year rally in 2009, 2010, 2011. Well, I guess in 11 it did peak, but I remember it was still actually okay, even though maybe the actual price peak was here. So, and actually, I've talked about the story about Tinka, which went from 10 to 50 cents, and I don't or on 15. That's how I bought my house in the Bahamas. So, that was this bull market here. But I think at some point we will have a bull market. I'll go back now 30 years, like the 2000s, where you can see it starts in 2000, where basically they went up from 2002, to 2007. It was a nice 5 year move. And again, if you take into the secondary bounce here, you could say the junior miners were strong, at least for, the better part of 10 years, from 01 to 2011. So the question is, will they ever move here? And you can see they have come up, etc. So, but I think here are some of the issues, right? Some of the issues are as follows. We have crypto now. We didn't have crypto. Junior miners were the speculative kind of way. If you were looking for a speculative way to play devaluation of the dollar, of course, you had resources in gold or the conservative ways, and then the speculative way of that were junior miners. Well, now people can play crypto, they can play altcoins, and I've always said that, they're more of a function of the stock market strength, crypto, and that's not really playing the devaluation, but a lot of people do think that, so they'll go into that. Secondly, we're in this period here where the market had a relatively weak rebound after 2002. And then people were scared off of tech stocks, etc. And gold was strong and resources were strong, so they were attracted to junior miners. And we had other sectors within the mining sector, like uranium was extremely strong in 05, 06. So that was another reason. So there wasn't as much competition. And now you've got tech is back, AI is back. Go look at junior miners. This starts in 99. The only reason that this, because there were some tech companies in the CDNX back then. But you look at the mining companies in the late 90s, when tech was strong and tech was the bubble, they didn't get a bid. So now we've had 10 years of, first it was 3D printing in 2014, and then it was crypto, and now it's AI. So we have all these bubbles and all these competing sectors. So I think, when my personal opinion, I've talked about the market cap to GDP. I've talked about the market being overvalued. I've talked to being susceptible to some kind of decline, correction, bear market crash, etc. What we need is this. We need the market to tank. Junior miners might get hit a bit, but they're already at dirt cheap levels. So, and then when they tank and the Fed has to reverse to loosening, that's when they're at their best. And we can see it here, even though they got killed in 2008. Look at the Fed was loosening here, right? And look what they did. They had this huge move. And I'll tell you another thing about the junior miners in a second. In 2020, again, the Fed was loosening. Look what happened, right? In in 2009, even though they crashed with the rest of the market. Boom, Fed loosening, and an excellent 2 years. So there's that, and there's also another aspect to it. Like, look, if junior miners didn't really move, I remember in 2003, I actually called it in my newsletter the year of the junior, and I said that juniors were going to finally move. And you can see that CDNX hadn't really moved, even the gold had moved higher in 01, 02, and then boom. So there's a trickle down effect. The large caps move first, and we've seen that Newmont, Barrick, GDX, GDXJ, whatever, office bottoms. Then the mid tier start to move. We're seeing that now. A lot of the smaller producers um, are starting to move very well because they have production, they have cash flow, and then the juniors move last. So kind of like this 0102 period, I think gold has really been moving higher for about a year. So maybe the junior miners will remain quiet for the rest of this year. And maybe we need this kind of correction and then the Fed reverse course. Remember, because in a correction, Bitcoin, AI, tech, risk assets are going to get really beat up in a correction. So then it will be like gold and silver. Again, if you go look at 03 or you go look at 2009, 2010, gold and silver in 2009 were the first thing, or especially gold was the first asset class that was back to all-time highs. I think by the spring of 2009, gold was back at 1,000, where the, NASDAQ, S&P, et cetera, were nowhere near. And then same thing here in 2020. Gold was back at its highs by a month or two after the crash, where again it took to like the fall, I think, for the indices to do that, S&P, Dow, etc. So probably if there is some kind of crash or correction, what you're going to see is the mine gold lead, and because it's like still a safe haven. Because early on in the loosening cycle, we have to understand is people are still conservative. Okay, they see the markets growing up, assets are going up, but what they're seeing is they're like, well, I just lost 50-60% in this AI stock. I just lost 70% in this altcoin. I don't want back in that. And they'll be like, well, that's interesting. Gold, I'll go in gold and silver though. They're back strong, and then there'll be a trickle down effect into them. So I think that will happen. That will really help, and them going forward. So, and let's face it, from a pure technical standpoint, if you're a long-term guy, this downtrend has held for 17 years. So maybe you wait for this downtrend to break, and then maybe that's when the junior miners start going back to these highs of 2007 to 2011. So the question is, I don't really know when they're going to move. My thesis is, we need that trickle down effect. And then number two, we need a correction. We'll put the S&P up just to show you. We need some kind of correction in the S&P, like 2020, like 2009, like the dot-com bust, and then out of that bear market, a correction, we'll see kind of like junior miners lead the way. Even the 2015 correction, when the junior miners were the low, yeah, when they had a huge year or a huge rally in 2016, because the Fed reversed course in terms of they'd stopped raising rates and the market headed higher. So that's really, really what we need here. So history has shown us that that's when they start performing well, and gold and silver perform well. So a combination of, I think we need the trickle down effect to continue. And then at some point it will go into the juniors. And then but what also helps that trickle down effect? If the other asset classes are getting hit, if crypto falls apart, if AI falls apart, and right now I'm seeing just to finish off here, the classic example of what I've seen at these other bubbles. When I started out in the late 90s, there were all these mining companies that were becoming telecom companies, .coms, etc. on this CDNX or TSX as it was at the time. Actually, I think it was still the VSC at the time. And anyhow, and then in 2006, a lot of the gold and silver mining companies were becoming uranium companies. That marked the top of the bubble in uranium. 2017, a lot of the junior mining companies were becoming crypto. That marked the top in crypto for a few years. And then now I'm getting guys, I had a deal that I got stopped out of, which was an AI deal. And then I just had someone recently pitch me on an AI deal, like a small cap. So now all the guys who were in mining are doing AI. So what does that tell you that what ALA is a bubble? But again, in the long term, what it means is those bubbles burst. Or like in 2020, 2021, again, gold and silver juniors were becoming lithium companies. Well, that marked the top for lithium. So that's one of the best indicators in the world, by the way, is when a lot of these bozos in Vancouver start doing that sort of thing. That's like a lot of these like kind of, I say, unsavory characters, promoter types. That's essentially usually that top in that sector, and probably a sign you want to stick if you are in the junior sector. And just so you know, I'm going to be a lot less active in the sector. I'm going to be very selective. Have a handful of deals. In the past, I've been kind of all in the sector, and that has not really served me well, to be honest, to be very blunt. And I've talked about this in the past. It's been bad for my health. It's been bad for my like mental health. Like I go through periods of depression because I look at some of these little juniors I own and I'm like, what the hell am I doing? Like I should have been owning like Pfizer or Philip Moore, Ultra or something, which I bought, by the way, which I'm doing well on right now. So anyhow, that's basically it. So I think this explains where I think the junior mining industry is. We're probably still in the bottoming process. We need to break those trend lines. We probably need a correction in the markets, and we need the trickle down effect. So everybody take care. Have a great weekend. Just a quick note. This weekend I'll be doing an update on kind of the future of it. To speak of the junior miners, I'm changing up what the stock chart of the day is. Like I'm basically not going to go and get sponsor companies anymore. I just don't want to do that anymore. I think I'm about 4 right now, and I'll keep those 4 until their sponsorships are up. And then we'll keep doing this as is for about the next year. And then I'll explain it more in that video. But, and also my Substack over the next week or so should be launched. And I'll tell you about that. So everybody take care.